Hi everyone, welcome to the channel. Today our focus is going to be on the company General Mills, ticker GIS, the multinational food company with renowned brands such as Cheerios, Betty Crocker, Progresso, and one of my all-time favorites, Cinnamon Toast Crunch. Early last year, the stock was trading in the high $80 to $90 range, but since then, it has had a steep decline, falling about 40%. In this video, we'll look at General Mills financials, perform a stock valuation, and at the end of the video, we'll go into computer modeling and forecast the 52-week stock movement. So let's jump right into it. Here's General Mills financials, and first I'll point out their fiscal year ends in May, so their next 10K will not be available to around June. In the top left, we have revenue, and we can see it's had a slight dip trending downward for a few years leading into 2017, but since then, growing every year and up 30% or nearly 30% since then. Net income, we could see a little choppy with some down years. Even for the most recent fiscal year 2023, it's slightly down, though it was trending upward since 2019. And for the past 10 years, it's CAGRed at 4%. So on the lower end of growing, meaning you will need to get in on the stock when the price is down to see any significant gains. Earnings per share having pretty much the same trend as net income, although the 10-year CAGR is slightly higher over the 10-year period, growing at almost 5%. Book value per share having the same 4% CAGR over the past 10 years, just like net income, going from $12.37 to $17.80. So seeing a steady trend in future growth projections for General Mills. Then for dividends, we can see they paused increasing the dividend payment in 2018 and 2019, but growing it every other year. And for a company like General Mills, you want to see a dividend increasing every year. And for 2023, it increased to almost 6%. So that is a good sign. Interesting to see that they had a nice downward trend in their share count going into 2018, but then 2019, 2020, they had an uptick, but they've had a nice turnaround since then. So hopefully they're able to keep this trend in reducing their outstanding count moving forward. Then free cash flow, having several down years and looking like a declining trend since 2020. So that is a little bit of a concern, especially since free cash flow plays an important factor when we're going to value the company next. And then we can see for free cash flow per share with that similar trend. And then revenue per share growing since 2017. I just wish free cash flow did the same. Now let's move on and we'll perform a stock valuation. Here's the valuation for General Mills, and I have an intrinsic value at $63.41. And with an 80% margin of safety, brings it down to $50.73, while the stock is currently trading at just under $64. Now, my valuation does use a short term growth rate of 4.5% over the next 10 years with a 10% discount rate, and I am using a 3% long term growth rate. And we can see the net income CAGR for General Mills over the last 10 years is basically 4%. And the CAGR for the earnings per share over the same time period is just under 5%. So you can see I'm using a 4.5% short term growth rate, so kind of in the middle there. But you could possibly go slightly higher, maybe up to around 5%, although it's not really going to change the valuation that much. But I wouldn't go much higher than 5% if I was going to increase it, as we saw in their financials. They're not showing strong growth in the past, so don't expect that to happen in the future. For a stock like this with a low growth rate, the only way to make a decent return is buying it when the market has it at a depressed value. And then hopefully within a year or two, it can recover at least 20, 30%, maybe a little bit more, and then selling out. It's not the type of stock, at least I would not own for the long term, as it's probably not going to make you a ton of money. But if you buy it at a low value, you're probably not going to lose money, a little bit of a safe bet, and you'll make some money on the dividend. But let's look at a few other data points. And one of the ones we want to point out here is this return on invested capital. And we can see here they basically average at least 10% over these time periods. And that is one thing I like to see is a company that can have at least 10% return on invested capital. And they do achieve this. So that is a nice sign. Probably has to do with their buybacks that we saw. They had that little uptick in, I think, 2019, 2020. But overall, they've actually achieved a very nice return on invested capital. And then the other one I want to point out is this free cash flow per share. And I'm kind of seeing somewhat of a trend here. We can see the 5 year negative 1.2%, 3 year minus 13.4%, and then 1 year negative 24%. So that this is a concern with the free cash flow going down. And though they're buying back shares, this is free cash flow per share is showing a declining trend. So that is a concern. But let's scroll down a little bit and look at a few other data points before we move on. So right here, PE ratio, see just under 16. So it is in that value opportunity, but I just don't think there's a big enough margin of safety to buy into General Mills at the moment. Next one, long-term debt to free cash flow. I like seeing under 3. We can see they're almost 4.8. And I think one of the reasons why it's so high is because that free cash flow has been on the decline, impacting this metrics I like to look at. Dividends, as we saw, they've been paying dividends. They had a slight pause a couple years ago, but overall, over the last 10 years, up almost 40%. Shares, we know they have been buying back shares, so down 12% or a little over 12% over the last 10 years. And net profit margin. So I like seeing companies at least 10%, and we can see here over the last 10 years, they averaged 11.4%, and over the last 3 years, actually slightly higher, almost 13.4%. So nice to see there. So overall, General Mills does have some nice data points. However, there are some concerns, especially that free cash flow being on the decline. So it is a concern. And right now, though it's trading slightly below my intrinsic value, there is no margin of safety. So I would hold off. And even if it gets lower down into the 60s or just under 60, in the 50s, I'm not sure how likely I would buy into this stock. Maybe if it gets into the low 50s, I would possibly consider it. But let's move on and we will look at the computer modeling, the forecast of 52-week stock outlook. Here in the computer modeling software, I already ran the analysis using two methods. First, the M5 rule shown here, and the other random forest. And I already copied all the results and pasted them into Excel, and we'll jump over there in a moment as it's a little easier to see. Well, let's just take a quick look at what these predictions are forecasting. And for the data is as of January 22nd. And the far right-hand column represents the weekly average price for General Mills. We can see it's $63.64. And the column right next to it is the weekly average for the S&P 500 ETF. And the other columns are just other various data points used in the analysis. Now we're going to scroll down 52 weeks and take a quick look at what the prediction is forecasting. And we can see here out in January of next year, it's showing a stock price at just under $77. So a nice little gain here for this prediction. But let's move over to Random Forest and we'll see what that's forecasting. For Random Forest, same thing. Data is as of January 22nd. And we're going to scroll down again out 52 weeks just to see what the prediction is. And Random Forest is actually showing a slight decline in the stock price out in January of 2025, closing at just over $62. But let's jump over to Excel and look at all this data a little closer. Back in Excel, I already pasted the data from the computer modeling, and first thing I want to point out is the vertical red line represents this previous Monday, January 22nd, and everything to the left of that vertical red line is the historical stock price for General Mills, and everything to the right is the computer modeling prediction. So let's look at a little history of the stock price first, and we can see back in 2009, it was trading around $30. And since then, it's barely doubled, around $64 as of today. So again, you can only buy this stock when the price is down and sell it after maybe making 20-30% in hopefully a small time period. But it did have a nice run up back in 2022 and again in 2023, getting in the $80 range and even breaking $90. But it's been downhill since then. Now, we're going to jump over to another tab and look at the computer modeling predictions a little closer. Looking at the M5 rule first, it's predicting a good recovery in the stock price, breaking $80 around November, but then falling slightly and closing out the 52 weeks at around $77, which would be a gain of about 20%. So, not bad for a 1 year return if that does happen. But let's move on and look at the next method. For Random Forest, it's showing the stock declining some more, getting close to about $60, but then recovering in April and continuing until December, almost reaching $70, but only to drop off in January 2025 and closing out the next 52 weeks slightly lower than where we are today at $62, which would be a loss of about 2.5%. But let's move on and we'll look at the average. Now, taking the average of the M5 rule and random forest, it's showing the recovery trend just like the M5 rule, as well, breaking $70 in July and getting up to about $75 around December. Then, with the same pullback in January 2025, closing out the 52 weeks at around $69.50. So, a gain of just over 9% if this does play out. To recap, I believe a fair value to buy into General Mills is between $50 to $64, with the lower end taking into account a margin of safety. Now, the stock is trading in the $64 price range currently, but this is a low single digit growth company, so the only way to make a good return is to buy it at a low price. Now, for the computer modeling, the M5 rule does have a positive outlook for the stock with a 20% gain over the next 52 weeks, while Random Forest does show a gain later in the year, but then dropping off in January 2025 and being slightly lower than where we are today at about a minus 2.5%, 3% return. So I hope you enjoyed this video and got some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.